Assalamualaikum warahmatullahi wabarakatuh. Today we are from group 2 from KMB1. I would like to present one of the company that have been listed in Bursa Malaysia as PN17. The company that we have selected is COMINTEL Corporation Berhad Company. Firstly, I would like to introduce myself. My name is Muhammad ZUHAIRI bin Jamal, 1180575. Before we go further, I would like to introduce what is the PN17. The PN17 stands for Practice Note 17, which is published in 2005 by Bursa Malaysia. And by the definition is practicing note issued by Bursa Malaysia in relation to a listed issuer who is experiencing financial recession in the main market. There are 5 criteria of PN17. The first is 25% below from shareholders' equity. The second is the company was default into payment and mentioned in paragraph 9.19a. The third criteria is company asset account for at least 50% of the total asset. The fourth criteria, the company was disclaimer opinion by the auditor for the latest audited financial statement. And the fifth is the company was winding up of a listed issuer subsidiary. So the COMINTEL Corporation Berhad company was announced as a company that being classified as an affected listed issuer under Practice Note 17 under Bursa Malaysia Security Berhad main market listing requirement from 2018.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Syed Imran based on KHALID. So I will continue to the next part, which is background of COMINTEL Corporation Berhad. So, COMINTEL Corporation Berhad was incorporated on 2 October 2003 as a private limited company under the name of the COMINTEL Corporation Sdn Berhad. They was subsequently converted into a public limited company under its present name of 10 November 2003. They also listed on the second board of Bursa Malaysia Securities Berhad, which is Bursa Securities, on 60 August 2004, which the stock name code is CORP 7195. So, Comcro is an investment holding company with the synergistic group of information technologies, IT, telecommunications, and research and development (R&D) companies focusing in providing nice solutions under its subsidiaries. Each subsidiary has its unique strengths and complements each other to provide total integrated IT and telecommunication solution to its customer. So next is the corporation governance history. So the board of director, which is board of the COMINTEL Corporation Berhad, COMCOP, or the company, is the committed to manage the COMCOP group in line the corporate governance practice as proposed in Malaysia Codes on corporate governance 2017, which is the code, and the main market listing requirements (LR) of the Bursa Securities Malaysia Berhad, which is Bursa Securities. There are 6 principles of course. The first one is board of directors. Second one is the directors remuneration. Third one is shareholders communications. Next is accountability and audit. Next is investor relations, and lastly is directors responsibility statement. Let's go to the next part, which is the financial performance history. So the data taken is from 2017 until 2021, which we compare the total assets, revenue, and profit or loss before taxation. So we go to the first part, which is total assets. We can see that 2017, 2018, 2019, 2020, 2021, total asset is highest at 2018, which is 1377023 total assets, and the lowest is the last year, which is 30,113. So that is total asset. So we go to the revenue. So the revenue is started from 2018 because 2017 it is zero, and started in 2018, which is 20,000. But it slowly go down, which is now latest 2021, the revenue is 121 only thousand. So we go to the profit and loss for profit or loss before tax. So we can see 2019 is the lowest one, which is the amount is negative 43,916, and the highest one is at 2018, which is 75,014. But last year 2021 is still lost, which is negative 11,422. So that's all from me for the financial performance history. So we go to next presenter. Thank you.
My name is Muhammad Syukri bin Muhammad Yusoff. My meeting number is 1190727. Today I want to continue present about the reason why the COMINTEL Corporation have been classified as PN17. Next. So the Bursa Security may suspend the trading of the listed security of COMINTEL Corporation and delist the company in the event. So point number one is company failed to submit a regularization plan, which is plan to the regulatory authorities on or before 24 January 2019. So point number two is the company fails to obtain the approval from any of regulatory authorities necessary for the implementation of its regularization plan. And lastly, its company fails to implement its regularization plan, which is plan within the time frame or extend time frame stipulated by any of the regulatory authorities. So next slide. Okay, so the COMINTEL Corporation have been classified as PN17. So point number one is shares of COMINTEL have been suspended from trading since May 31st, 2021 after Bursa Malaysia rejected the company application for more time to submit its plan to regularize its PN17 condition. Okay, number two, the PN17 condition was triggered in March 2019 after its shareholder equity fell to under 25% of the issued share capital. And number three is COMINTEL largest shareholder comprise its managing director Lim Chi Hock, who has a 27.98% indirect stake and 0.64% direct stake in the company. Number four is for the first half ended July 21st, 2022, the COMINTEL posts a net profit of 4.61 million versus a net loss of 1.86 million a year earlier. So the revenue jumped to the 49.97 million from 896,000. And lastly, the company shares last trade at 9 cents a piece at the end of May 2021, giving it a market capitalization of RM 13 of million. So this is based on the annual report 2022. So we can see here, point number 1 is COMINTEL Corporation is currently classified as a PN17 company. It is after the company triggered as prescribed criteria under paragraph 2.1 bracket A and 2.1 bracket E of PN17 in the main market listing requirement, which is under MMLR of Bursa Malaysia Securities Berhad, which is under Bursa Securities. And point number 2 is also was required to regularize its condition within the stipulated time frame. And number 3, we can see here during the financial year ended 31st January 2021, the company submitted return application to Bursa Security on 24 July 2020 and 22 October 2020 to seek for an extension of time to submit a regularization plan, and on 17 August 2020 and 20 November 2020 respectively. And the last for Bursa Malaysia Berhad granted the company further extension of time of 3 and 6 months respectively up to 24 October 2020 and 24 April 2021 respectively to submit a regularization plan pursuant to paragraph 8.04 bracket 3 together with paragraph 5.0 of PN17 of MMLR, which is the main market listing requirement. And lastly, okay, so we can see the reason why COMINTEL Corporation failed. So the COMINTEL Corporation Group has been increasing its effort to gain access to credible sources of the funding with financial institution. However, due to the group having a substantial subsidiary under the winding up and COMINTEL Corporation PN17 status, okay, so we can see the red color, which is the point. This had hampered to the group's opportunity to raise fund to properly fund the business and potential project, and limiting the ability to fulfill the group obligation and execution of project delivery solution. So with the termination of winding up granted, so we envisage there will need to improve the chance to secure the funding. So this is the reason why the COMINTEL Corporation failed. Okay, that's all from me. So we go to the next presenter.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So my name is Muhammad AKMAL bin Abdul Jamal and my matric number is 1190734. So for the next question, which is question number 4 and 5, our team will separate this question to several part, which is will be presented by me, Muhammad AKMAL, and Muhammad HILMI, Muhammad AZMI, and Adi ZAKWAN. So the question number 4 is evaluate the financial performance of the company for year 2018 until 2021 And the fifth question is compare and analyze the impact of financial performance of the company, which financial ratio or any other financial performance measure. So how do we evaluate the financial performance? So our team basically we use a multiple type of ratio, which is the first one is profitability ratio. So profitability ratio are a class of financial metrics that are used to assess a business ability to generate earning relative to its revenue, operating cost, balance sheet asset, or shareholder equity over time using data from a specific point of time. So under the profitability ratio, which is the first one, is net profit margin ratio. The formula for this ratio is net income divided by revenue. So after we calculate, we will our team calculate, we will get the data which is for the 2021, we get negative 23.61. 2020 6.46, 2019 negative 8.31, and 2018 negative 5.43. So from this question, the company ability to generate the net income on each revenue sale received is decreasing from year to year. A positive ratio value from the 4 year was only found in 2020, and in other years it had a negative value. So for the next profitability ratio, which is EBIT margin ratio, the formula is EBIT divided by revenue. EBIT is short form for the earning before interest and taxation. So for the year 2021, our team managed to get data which is 2021 negative 6.36, 2020 7.51, 2019 negative 8.31, and the last 2018 is 7.61. The use of EBIT against each revenue generated show that the company experienced the same case in which declining from year to year. It showed that it's quite difficult for the company to remain competitive with other companies in the same industry because the instability of this ratio show the evidence. So for the next profitability ratio, which is return on asset ratio, the formula is net income divided by total asset. For the year 2021, we managed to get 0.72, 2020 0.54, 2019 negative 0.8, and 2018 we get negative 0.25. This ratio shows that the company is only able to produce a positive outcome for the total asset in 2020. While for the others year, the company has negative value, which indicate the possibility that there are assets that cannot have a positive impact in generating income. Companies are only able to operate efficiently on the 2020, while others are less efficient. So from this ratio, we can see that the net income cannot cover the total asset, basically. So for the next profit ratio, which is return on equity ratio, the formula is net income divided by total equity. For the 2021, we managed to get 5.12, 2020, 1.41, 2019, negative 27.37, and 2018, negative 0.36. ROE is considered a measure of company profitability and how efficient is generating profit. The higher the ROE, the more efficient the company management in generating income and grow from its equity financing. If we see from the data, this company is not operating efficiently because there are many negative value and value greater than one. This is because maybe one of the reason is the equity, total equity in a negative value, or the net income that they managed to get is not net income, but they get loss in their income. So for the next way, we evaluate the financial performance using the leverage ratio. For the leverage ratio is a several financial measurement that look at how much capital come in the form of debt or assess the ability of a company to meet its financial obligation. The leverage ratio category is important because company rely on a mixture of equity and debt to finance their operating, and knowing the amount debt held by a company is useful in evaluating whether it can pay off debt as they come with. Several common leverage ratio are discussed in this slide. So for the first one is debt ratio. Debt ratio is total debt divided by total asset. On 2021, we get 0.35, 2020, 0.62, 2019, 0.95, and 2018, 0.30. If you look at the debt ratio, it clearly shows that all the ratio are below to the value of 1. This shows that the most of company debt can still be covered by their existing asset. And the data also show that if the company, if there are parties who want to invest in this company, they can still be considered because the risk shown is decreased year by year. The next is debt on equity ratio. The equity ratio is total debt divided by total equity. For the 2021, we get negative 2.46, 2020 negative 1.60, 2019 32.5, 32.45, 2018 0.43. As for debt to equity, the ratio show a very dangerous value. First of all, in 2018, it is still in good condition, but in 2019, it increased sharply and it dangerous for shareholder. And in 2020, it decreased again due to some reason of its own, and in 2021, it became negative because the value of the company equity has reached the value negative 2. This shows that the company has high leverage and is risky to invest in. So basically, the total debt, we can see that they are more debt than their have equity on their hands. For the next is asset to equity ratio, which is total asset divided by total equity. The data is 2021, we get negative 7.10, 2020, 2.60, 2019, 34.10, 2018, 1.44. For the asset to equity ratio, there is no ideal value for this ratio and it depends on the company decision. But in this question, this company has several scenario where in 2018, the value of the ratio is quite good in 2018. And it jumped to 34.1, showing that the company asset are higher than equity. And in 2021 has reached negative value, indicating the possibility of that burden has caused the company to raise the value. So basically, the 2021 get negative 7.1 is because the total equity maybe have in the negative value. And the last one is debt to EBIT ratio. Total debt divided by total EBIT. For the year 2021, negative 1.78, 2020, 0.98, 2019, negative 1.19, 2018, we get 0.5. If you look at the debt to EBIT, the company can still compete with other company in the industry. This is because in 2018 until 2000, this is because in 2018 and 2021 the value is still below the value the value of 1. However, in 2018 and 2021, it has reached negative value due to the EBIT value in the current year also getting negative value. Is that the company need to think way to get out of that burden first. So that's all for me. I will pass the next presenter to the next presenter.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad HILMI bin Muhammad AZMI. My matric number is 1190713. So today I will present about the question 4 and question 5. Which is question 4 is to evaluate the financial performance of COMINTEL Commercial Berhad, and question 5 is about the analyze and impact by using the financial ratio or any other performance measure. Okay, so I pick this one. So I will present about the market value ratio and also the efficiency ratio. So I pick these two of market value ratio, which is earning per share (EPS) and price earning ratio. So EPS is calculated as a company's profit divided by the outstanding share of its common stock. So refer to the diagram, it shows the consecutive increase in EPS from 2018 to 2020, which can reach EPS at 10.19. So it shows that the company EPS is in a good condition. The company's performance is likely to rise. In addition, there is a decrease of negative 5.77. This is due to external factor, namely the tragedy of COVID-19 pandemic at the time. Okay, next for the price earning ratio. Price earning ratio, also known as a PE ratio, is the ratio of a company's share price to the company and the per share. The ratio is used to valuing company and to find out whether they are overvalued or undervalued. So this one is a formula for the price earning ratio. Share price divided by earning per share. So refer to the diagram, it shows that the price earning ratio experienced an increase from 2018 to 2021. So it shows that the computer commercial berhad with high PE ratio are more likely to be considered risky investments than those with low PE ratio, because a high PE ratio means high expectation for a company potential earning growth. Okay, next for the efficiency ratio. So I pick three of efficiency ratio, which is asset turnover ratio, inventory turnover ratio, and last one is sales in inventory. So okay, for the asset turnover ratio is asset turnover ratio measures to the efficiency of company asset in generated revenue or sales. And this is the formula for asset turnover ratio. Net sales divided by total asset. So refer to the table, it shows that increasing in the ratio from 2018 to 2019 with 0.05 and 0.1. So it shows that COMINTEL operation berhad use asset efficiently and well. It's because the higher the ratio, the more efficient the use of asset in a company. Next, there is a decrease in from 2019 to 2021 with a figure of 0.1 to 0.03. So the company has a lower turnover ratio due to the less efficient use of asset. Okay, next, inventory turnover ratio. Inventory turnover ratio is a financial ratio showing how many times the company turnover its inventory relative to its cost of goods sold in a given period. Okay, so the formula for the inventory turnover ratio is net sales, which is revenue divided by inventory. So refer to the diagram, it shows an increase in the ratio from 2018 to 2019, from 4 times to 16 times. So it means that computer is good at managing merchandise. This is because the higher the inventory turnover ratio, the stronger the sales. Next, in 2019 until 2021, the trend shows decrease from 16 to 1. So it shows this company is affected by external factor, which include COVID-19. And the last one is this sales inventory. So this sales of inventory is the average number of days it takes for a firm to sell off inventory. And so this is formula for the day sales inventory. Inventory divided by cost of goods sold times 365 days. So it shows that it shows a downward trend starting from 2018 to 2019. So it means that this COMINTEL company manage inventory well and also does not use additional cost too much because of quick inventory management. In addition, in 2020 to 2021, it shows the upward trend from 30 days to 209 days. Meaning that the company has added little extra cost to inventory management. It's because the year also saw the COVID-19 pandemic crisis. So with that reason, COVID and also the business sector, the others are affected as well. So we will go for the next presenter.
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad ZAKWAN bin Muhammad Salleh. My metric number 1190739. So I will proceed with the ratio of financial performance, which is liquidity ratio. So for the liquidity ratio, for the first component, we have current ratio, which is
current asset divided by current liabilities, we get current ratio. So for the summary of this current ratio, the diagram shows that the ratio value has fluctuated and COMINTEL Corporation Berhad produced the lowest current ratio in 2021, which is 0.876. So in this case, it is not an ideal ratio for this company because it is below than 2. Therefore, the financial strength for this company is only strong in 2018, which is 3.449, and for the other years, it is not what company wanted, which are in 2019 and 2020. Okay, for the second component of liquidity ratio is quick or acid test ratio, which is quick assets consists of current assets minus inventories divided by current liabilities. So for this summary of quick acid test ratio, the table shows that the value has similarity with the current ratio that indicates in 2018 shows the highest value, which is 3.434. Basically, the company will get the best measure of liquidity using this ratio because it is more conservative than the current ratio since it will compute by adjusting current assets to eliminate those assets which are not in cash. Okay, next, we go to the third component of liquidity ratio, which is cash ratio. It is from cash balance divided by current liabilities. So for cash ratio, the diagram shows that the value of cash ratio has fluctuated starting from 2018 until 2021. As we can look, the lowest value that company produced was in 2021, which is 0.007. In this case, if the company is forced to pay all current liabilities immediately, COMINTEL Corporation Berhad will struggle to manage this issue since the company needs to face insufficient cash on hand to pay off short-term debt. Okay, so the next one is net working capital ratio, which is the formula is net working capital, which is consists of current assets minus with current liabilities minus short-term bank borrowing divided by total assets. So as we can see, the diagram shows that the value of net working capital ratio has fluctuated starting from 2018 until 2021. But the lowest value of ratio that company produced was in 2021, which is negative 0.141. In this case, the company had incurred a huge cash outlay and the increase in accounts payable because of large purchases of goods and services from supplier. The other factor that can we include in this case is the crisis of pandemic COVID-19 that gave a lot of major impact for the COMINTEL Corporation Berhad itself. So for the conclusion of financial performance of the COMINTEL Corporation Berhad, as we can see, the financial performance is an overall assessment of a company's position in areas such as assets, liabilities, equity, cost, revenue, and overall profitability. It is calculated using a variety of business-related formulas that allow users to determine prices data about a company's prospective effectiveness. So, in general, as we can see, financial performance for the COMINTEL Corporation Berhad is quite good, starting from 2018 until 2019. However, after upcoming years, which is in 2020 and 2021, overall financial performance of this company dropped drastically because of the crisis of pandemic COVID-19 that affected not only COMINTEL Corporation Berhad, but around the world.
So come back to the last presenter. As a last presenter, I would like to do some conclusion and give recommendation. As we know, COVID-19 have give much more impact to the previous performance and give recession to the companies. So the company should have another strategy to increase financial performance. The strategy that can be made is the company should invest in well-managed companies that have low debt and good cash flow and strong balance sheet. The second, the company also should to avoid to invest in the companies that have highly leveraged or speculative to avoid biggest risk from doing poorly during tough economic times. So the next recommendation, the company should effort to gain shareholders of honest equities become above to 25%. To improve stockholders equities, the company should to perform the additional in stock investment or push additional net income. Other than that, the company also should convert their debt into stock. And the last point, the company should think to go to the public offering, which is IPO. This option is to encourage diverse investor so that it will increase the amount of cash that the company raise when issuing the shares. That's all from our session. I will stop my presentation. Thank you so much.